Hi, I'm Baldwin Burgess. I'm here with Gavin Butcher. How are you doing, Gavin?
Well, thanks, and you?
I'm very well, thank you very much. We're in Dubai at the Middle East FundForum 2013 on the Global Growth Summit Day. It's the first day of the event, and today we're talking about emerging markets, frontier markets. And, you know, obviously, how can it be that you're not here? You are here because of Africa. That is one of the themes that we've heard a lot about today, haven't we?
Yes, exactly. I mean, what we wanted to do by coming along to the forum was to discuss the opportunity set that we see in Africa. We've been running an Africa fund now for the last 5.5 years. We first started running as a hedge fund, but we now have a long-only fund that's got a track record of just under 5 years. And we think there's a great opportunity out there, and we want to get that message across to people.
Okay, so you're managing your Africa fund out of London and Cape Town, I believe?
Yes, well, it's mainly around out of London, but we do have an office in Cape Town as well.
Okay, and so what is your focus in Africa? Is it there's 54 countries, it's a large continent. Which countries do you like to focus on?
At the moment we've got, we have country limits in our fund, so we can have maximum exposure of 50% in any single country, and we have got just under that in Nigeria. We also have Kenya, Zimbabwe and Egypt are probably our 4 main areas that we invest in the moment, but we look at any opportunities. So we have investments across the continent where we will just have a single investment in a country. We don't have any investment in South Africa. So that's the one thing that one thing that we do exclude. Yes. Okay.
And so you're sector agnostic. Are you more leaning towards resources, or is it consumer, or is it just essentially are you?
No, we're sector agnostic. We we started out the fund. We had a larger exposure to the resources sector, and we know the space well. For the last year and a half, we probably had about 5% of the fund in that. So at this stage we are mainly focused, well, in fact almost all in listed equities. We have a small amount of cash in the fund at the moment, but just under 50% in Nigeria, and then the rest of the next 3 countries I mentioned are pretty evenly spaced in terms of sector allocation.
Okay, and so when you're here in Dubai, do you come here regularly to speak to investors? Is this on your beat, or?
No, not normally on our beat. And in fact, this is the first time I've been to a conference here.
Oh, I see. Okay.
An investor conference. I've been to other conferences here, but we're not an investor conference. Normally, we do our marketing in London and in Cape Town, or in South Africa.
And is the ex-South Africa theme, is that something that would come from South African demand as well? They would really want to look at the rest of their continent?
It's mainly that if you include a South Africa in your fund, it's got to be a pretty big percentage of the fund, and so people want to exclude that. It needs to be almost 60-70% of the fund if you want to track any kind of index. There are other reasons that we do it. One is exchange control in South Africa, so it's easier not to include it. But there are quite a few funds that do the same as us. They're Pan-Africa, ex-South Africa.
Okay. Interesting. And so when you I'm also an Africa manager, and so I always like to share notes on how you go and make this story consumable for people, because there's so much to say, there's so many stories to tell. Typically you're going to be investing in 5, 6, 7, maybe 10 countries. What do you feel is the thing that resonates most these days with investors? How do you put that forward?
Well, everyone talks about the consumer and about the growth of the African continent, all those things. So we don't like to repeat that, because a lot of the investors that we see know that anyway. You don't want to go and preach the same stuff again. So what we like to talk about is the improvement that we've seen in Africa. So be it from the amount of trade you can do, the sort of liquidity of the market, to corporate governance, to corporate disclosure. Whilst it's not perfect, all of it's improving, and I think that's the important thing. If you look at investment opportunities, if you're coming off a low base, then you can make the best multiple on that. Off a low base, and I'm not saying that all of Africa is off a low base, but what I am saying is that you can see quantum improvements. Even when you look at the consumption numbers that everyone talks about, on a per capita basis, everything is low compared to the rest of the world. So much the same way with corporate governance and company disclosure, all those things are just getting better, and you can invest easier. We run about $70 million fund. we can trade the thing easily. We can move it around. We can increase our weighting in Egypt. We can decrease it in Egypt if we need to. Yeah, it's everything's improved.
What I always find interesting is, I'm from Europe, you're from South Africa, and even for a European, going to Africa is really not that much of a trip culturally. But if you go to Asia, there's all these different habits, so you have to get your head around. Even in the Middle East, it's quite different. So what I find quite interesting is that once investors discover Africa and they see like, this actually resonates with me, then there's no letting, once you've been there, there's no way back, is there? But it's just getting them to take that close look and
well, lots of the products that we see in our everyday life is actually sold in Africa. So if you look at the consumer products, all the brand names that you would recognize are all advertised there. Similar cell phones, all the sort of commodities, everything is much the same, and a large portion of businesses, all of them run on a very similar principles to what we used to. So I must say that I found it particularly hard to follow the African markets.
Okay. Well, thanks for that, Gavin.
Pleasure. Nice to meet you.
Thank you very much. Baldwin Burgess, Gavin Butcher.